So when I say becoming your own bank, I mean it literally. What if there was a way that you can take back control of your finances and do exactly what banks do? You can save money, earn interest, as well as borrow money back out for yourself tax-free and still earn interest on the money you borrowed. I'm Scott. I've been in the financial services industry over 20 years showing people how to do exactly that. Become their own bank utilizing the financial instrument that banks do. In this video, I'll explain what it is, how it works, and how to get started. So what is infinite banking? It's not a product. And it's not an investment, because an investment classifies risk, and there's absolutely zero risk with this type of strategy. It's a process where we utilize a specially designed and engineered dividend-paying whole life insurance policy, but not your traditional whole life like Dave Ramsey and Susan Orman love to talk about. We're talking about something that has to be structured properly by a specialist or an expert like myself. See, in order to meet infinite banking, it must have three major components to it. One, it must be issued from a mutual insurance company, not a stock company that answers to shareholders for profit. Two, it needs to be issued from a mutual company that's never once ever missed a dividend interest credit. And three, it's got to be around over 100 plus years in business. Take me for an example. For my first policy, what I did is I designed it where I pay a little bit of premium, but I can also stuff in a lot of extra cash, say about $20,000. So imagine this, I pay $6,000 a year for the premium. I could throw in an extra $20,000 right to the savings component that the life insurance policy has that I designed. But within 30 days of approval, I was able to borrow back out $20,000 from the $26,000 I gave them. Now, what I did could be different from you. I went ahead and I paid off my Macy's, Home Depot, Amex, and my Citi card, and I wiped those out. For me, it was more about doing a balance transfer, where I would have paid Visa and MasterCard anyway, a couple $100 a month, but at what interest rate? 15, 20%? Now, the policy's interest rate that I owe them may be 4, 5, 6%. But I'm earning dividends at the same time on the same $20,000. So imagine this, I give a life insurance company $26,000. They let me borrow $20,000 right back out to myself. Are they gonna charge me an interest rate? Yes, maybe 4, 5, 6%, whatever it is. For me, it doesn't matter. It's much lower than what the interest rate environment is today and what Visa and MasterCard are charging me at what, 18, 19, 20%. But how would you like to earn interest on that same $20,000 while I pay it back whenever I want to? There's no payment plan, there's no surrender penalties, there's no one coming knocking on the door, trying to collect money. Now, obviously you want to pay it back anyway, because why would you borrow money and not pay it back, right? That's the whole point, becoming your own bank. If you were still going to write a check out to Visa, MasterCard, Amex anyway for $100, $200, $300 a month, why wouldn't you just recapture that money and just redirect it to there? But now you're earning dividends on the same money you borrowed while you pay it back the same way to Visa, MasterCard. That's leverage, that's power. Leave a comment below, let me know what you think. If there's anything I can do to help, maybe a one-on-one, show you exactly how to become your own bank like I did. I've taken 28 loans from my policy, and I've still earned dividend interest credit on the money I borrowed. That's how I become my own bank.